Good afternoon, everybody. I trust that you are well. This is a very high-level overview of Britannic Opportunities Ltd, in which I'm going to explain why it's such a good offshore investment opportunity that is worth considering. Whenever you invest in any unit trust, direct share portfolio, exchange traded fund, or structured product, these are the four factors that you have to take into account before you make any investment decision. That being, what are the costs of the investment, how much am I paying for it, how much risk am I taking relative to the potential upside, and what is the tax implication of the investment. As you always have to compare investments, the net of all fees, net of all taxes, and you always have to look at it on a risk adjusted basis. How much capital did I put on risk in order to achieve the potential upside? If we unpack Britannic Opportunities Limited using these four factors, first let's look at the fees. The effective annual charge that has been built into the par value of the share is 1.33%. And what do I mean by that? It means that no additional fees will be levied during the 3.8-year term. It also means that there will be no platform fees, no performance fees, and I also do not charge any upfront fees. So for a fee of 1.33%, to have 103% of your capital guaranteed is very, very low. You're welcome to go and compare this to all your other investments. Just ask for the effective annual charge, and you will see that it will equate roughly to about 2%, and that is without any downside protection. If we have a look at the risk of this investment, we basically have to split it also into two categories, namely A and B, and we have to look at it from a return perspective. Where will the return be coming from, and also from a credit risk point of view, where will the actual risk of this investment lie? So let's look at the return first. It is well diversified, as it's split between 775 companies, which is listed in the US, Japan, and Europe, namely the S&P 500, which is the top 500 companies in America, the Nikkei 225, which is the top 225 companies in Japan, and the Eurostoxx 50, which is the top 50 or the biggest 50 companies listed in Europe. So from a return point of view, well spread, well diversified. From a credit risk point of view, however, it is only split between two counterparties, namely First Rand and Absa. And it is First Rand and Absa's Tier 2 sub-debt, which is safer than owning the ordinary shares of First Rand or Absa. So from a risk point of view, a safer investment than owning the ordinary shares. But this is not for all your money. Even though it's highly unlikely that First Rand or Absa will be unable to meet their debt obligations, one has to place a prudential limit on First Rand and Absa. So in future videos we can unpack this a little bit further, but let's leave it at that for this video. When we have a look at it from a return point of view, there's also different factors that we have to have a look at. The investment gives you access to listed shares or equities, which is the best asset class that you can invest in over the long term, as history has proven that equity returns are far superior to bond returns or to cash returns. It's also the asset class that has the best probability to beat inflation over the long term. The investment provides you with a 200% participation factor. What that basically means is if the weighted basket indices movement is 10%, you will receive 20%. If the weighted movement is 15%, you will receive 30%. But the investment is capped at 34% return in dollars over a 3.8-year term, which equates to an IRR, or an internal rate of return, of 8% per annum. So if we take the inflation percentage of 1.6%, which is the average over the last 10 years, off that, it gives you basically a real return of 6.4% net of inflation. which is a very, very good return, especially considering that you're not taking equity risk. So very, very good investment from a return perspective, as the long-term average over the last 32 years has been 8%, which the markets has delivered, and that is without any downside protection. With this, you can receive the 8%, but with 103% downside protection. When we have a look at it from a tax point of view, very, very tax efficient structure, as capital gains tax will be applicable should you decide to sell the share in 3.8 years time, since it's a listed share. But the structure also enables you to lock in future profits without triggering a tax event. And how they achieve that is, you own a share in a Guernsey incorporated company, namely Britannic, and Britannic owns the underlying assets that will be making the profit. And because the company will be making the profit and there are no taxes in Guernsey, that is why no tax will be levied on the profits that is going to be made. So you can effectively lock in your gains every 3.8 or 5 years without triggering a tax event. So you effectively only deferring the tax, because you will pay capital gains tax one day when you sell your share in the company, namely Britannic Opportunities Ltd. This is something that you cannot do with any of your other assets that you own. If you sell a unit trust, or if you sell a share in your listed share portfolio, or you sell an exchange traded fund, you will trigger a tax event whenever you unlock profits. So a very, very attractive feature of this investment. A very high level overview. As I said in the beginning, you can't make any investment decisions just based on this video. You would have to contact me so that I can explain it to you in more detail. I'm also going to make a couple of more videos, which is going to which I am going to go into a little bit more detail, just to explain everything as best as I can. But if you have any questions, please do not hesitate to contact me at Johann with a double N .Strauss with a double S at psg.co.za, and please feel free to share this video with friends and family, as the closing date for this investment is the 7th of July, and Investec works on a first come first serve basis, and capacity is limited. And that's all for today. Keep well. Cheers. Bye.